Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for May the 3rd, Monday evening, 2021. I've got a lot I want to go over with you today. It'll be pretty important for you guys to be willing to ask questions when you come in. That'll be helpful. And it looks like no one else has, okay. Well, a couple more joined, but I'm still looking for Doug or Marco. So Doug or Marco come in, let's wish them a big welcome. Market recap for last week. We hit another record high. It's the 5th up week in 6. What does that usually mean when we're going to have 5 up weeks out of 6, or we're hitting record highs? What do we do that, what is the expectation when we hear that or see that? Keeve, I think you're good, and I've got you muted. I see you muted yourself. All right, so the question is, what do we do when we see record highs and 5 out of 6 weeks or 4 in a row? Yeah, a turnaround. The expectation is we're going to have a sell-off before we take our next run higher. Typical pullback, 5, 7, maybe 10%. We go off to the races again. We definitely saw some profit taking last week. It was obviously not a bad April. People are having a hard time believing in Jared Powell's, what am I trying to say? The Fed Chair Powell's, hey, we're okay with inflation pressures and we're not going to worry about it till next year. What is the problem with that? And what's the problem with inflation? What is the problem with ignoring it till next year? And what is our problem with inflation? Prices are saying something different. Agreed. In fact, prices are going up, which means the dollar is weaker and we get less value for our dollar. I'm shocked that we don't see that in the government. And if we run to a $15 minimum wage, that will most likely spark hyperinflation, right? We have a couple more coming in. Let's see who that is. Hey guys, we have Marco Fields joining us for the first time. And we have Doug back from his service or his tour duty. I'd like to welcome both of you. Thank you for joining us. And right off the bat, pretty interesting. You've got a couple of highs from the groups. Marco says hi back. Doug says thank you. Hi, Marco. Thank you for joining us. And Doug, thank you for your service. We appreciate that, David. Jim Kohler welcomes both of you. All right. Glad to have you guys with us. Jim also said inflation will hamper growth. On the other hand, if current devalues more than the places, the country becomes more competitive commercially. So Abraham is correct. Of course, leave it to our Brazilian, right? Hey, if inflation goes up, it devalues your currency and it helps selling stuff overseas. Agreed. But inflation is a little bit different because inflation usually will rise, the prices will rise as the dollar is valued less, which means inevitably when we find equilibrium, Abraham, we'll probably see higher prices even on the stuff overseas. All righty, last week of the 11 sectors, consumer staples, healthcare, and technology ended the week lower, which was interesting because today the NASDAQ ended lower. Not a reason to run out, but there's obviously some profit taking going on in the FANG stocks, right? Facebook, Apple, Google, Alphabet, Netflix. The FANG stocks are definitely taking a hit as people are taking profits off of them. ExxonMobil, which reported better than expected results on Friday, gained 3% last week, but they were down on Friday. In fact, both Chevron and ExxonMobil were down basically for the week. And again, I'm not sure at this time. I see that we have, even with rising oil prices, I don't see those gains in those oil stocks just yet. So pay attention for those of you looking at oil, energy, Dominion Energy, First Solar, some of the electric energies. Excuse me, as I'm still recovering from COVID here. They have not taken off like we would have expected. So please be careful. We probably will not have a run in those energies more towards the end of next year when we see the tax cuts that'll be implemented for clean energy coming next year. So if you're looking to run into them now, you might be jumping the gun just a little bit. If we are to look at our core holdings for earnings, we have General Motors on Wednesday, Under Armour on Tuesday, and nothing else for the rest of this week, although that seems like I'm missing something. CVS on Tuesday, Under Armour on Tuesday, General Motors on Wednesday, and AMC Movies is on Thursday. AMC Movies is not a core holding. For our education, let me jump down to a question that came in via email. The question was, Under Armour earnings this week, and I did not see a long put in place over the weekend. So Mary was asking, hey, we had Under Armour, which we took our protection off at $22, that's currently trading at $24.17. And earlier today, we put the protection on at $24.50. We have the right to sell $1.5 million of Under Armour, roughly 62,000 shares at the price of $24.50. So Doug, it's been a while since you've been here. Again, thank you for your service. Marco is a little bit new here. Let's go over what that means right now. If I was to take a calculator and multiply those 62,000 shares by $24.50, we would be able to sell those shares for $1,519,000. So what would be the ideal price if Under Armour tomorrow after the market closes does not give a good earnings report and we see Under Armour fall? Someone tell me today, what would be the best price for Under Armour to fall down to? Not a trick question. Currently trading at $24.17, right? Where would we love to see Under Armour fall down to? A lot of you are probably, well, a lot of you know where I'm going with this one. But I also know some of you are thinking, Kevin, How far do we want it to fall to? We know it's been down to 16, right? We can see it's been down to 16.22 in the last 6 months, but I'm looking for a specific answer. ADP wants to see it fall down to 24.17. Well, that's where it closed at, right? But we have protection on at $24.50. So if the earnings are not good, where would we expect, where would you like to see Under Armour fall down to? Bill, I love it. Bill says $20 or lower, $16 or lower, as far down as it can. I absolutely love it. The lows for last year, well, not zeros, Jeff, because that doesn't help us out very much. But doing the math, right? If Under Armour falls to $16 a share, we can sell at 16 and buy, well, excuse me, we can sell at 24.50 and buy back in at 16. Let's do this as a group, right? $1,519,000 divided by $16. Right now, we know we have 62,000 shares, right? Let's do the math. $1,519,000 divided by 16 would give us, wow, that's kind of amazing, would give us 94,937 shares. We could basically pick up 50% more shares of stock on Under Armour. The funniest part about all that, it would cost us $1.43. Let's continue to do the math, right? So every 2,000 shares would become 3,000 shares at a $16 buy-in price that's 100% paid for by the insurance. So it's for $1.43. Let's just calculate our new break even. New break even, we had 2,000 shares times the cost of our protection of $1.43 is equal to, let me try to do a little bit of math for you here, right? 2,000 times $1.43 is equal to $2,860 divided by 3,000 shares divided by 3,000 equals a whopping 95 cents. So if Under Armour then moves to $16.95, we break even. And if Under Armour moves back to, let's just say $20, never gets back up to $24, right? We are profitable by 30%. And I'm coming up with that because we have an extra 3,000 shares, 100% paid for, and we're booking $3.05 a profit. It's a pretty awesome return. What I also like, if I can show you these numbers just a little bit bigger, let me make this just a little bit bigger. What we really wanted to do this year, I'm going to move this over. What we're really trying to do if you do the math, this is profit this year, right? If you subtract that from the market value, 1599.290, 1599.290 minus 427,045, that gives you 1.172 million. 427,000 divided by 11.27 means we've already booked about a 37% return on Under Armour year to date. That is not a bad return to have on Under Armour. That's a pretty good return to have one of your core holdings, a smaller stock, be netting you a 35 to a 37% return year to date. That's what we're trying to do. Great question that was brought in on Under Armour. Work some of those numbers. Send me another email if you have a question on it, and we'll go through it. But a great question on Under Armour. Okay. Taking a quick look at our markets. We still have the Dow Jones in bullish territory, meaning technically we're above the RSI, the 50 median line. We're profitable. The 5 and the 20 are probably sideways, and our MACD is turning bearish. We do not yet have all three indicators indicating that we're going to do a directional change or a bearish. We're still technically bullish. But looking at this chart, what does this chart tell you about the Dow Jones Industrial Average? There are two correct responses. Kevin, it could be building a base. It could be building a base, but what does that mean? What direction does that mean we're going to go? I like it. So David says we're building a base. I think it's going to go higher. That could be. We really don't know. Another comment is we could be building a resistance level and heading lower. If we get our typical sell in May and go away expectations, that we would see the 33,702 run back down to the 32,918. So we're looking about at an 800-point drop down on the Dow Jones Industrial Average, and the expectation it'll be like this. It'll hit a couple times, probably bounce higher, hit a couple times, probably bounce higher. I'm going to explain why it'll probably bounce higher in the quick near future. All right. take a look at the S&P. We're looking at the S&P. Technically, it looks almost like the Dow Jones. Still technically bullish. Building a base. We probably have the 5 and the 20 on top of each other. We have our MACD indicator indicating that we're heading bearish. Where are we going to go on the S&P 500? Kevin, we're probably building a base because so much stimulus has been put into our economy, which is exactly true. We had stimulus last year with President Trump. We have double the stimulus coming with President Biden, and there's 2 other stimulus packages that are on the dock. Yes, we're probably building a base to go higher because of all the money that's being pumped in the system, which will artificially inflate our stock market. I'd agree 100%. With that said, as we look at how the S&P 500 has been buoyed and moved higher, every time it hits that 50-day moving average, we see it running higher, which means, and you're going to laugh at me, guys. Give me a second. I need my glasses, my eyes. I needed my reading glasses. I can't believe I'm getting old. We're looking at a drop from 4,192 down to 4,008. So we're looking at about 186 point drop, which would be about a 4.5–5%, a typical correction in our market, typical pullback, which will help us bounce higher down the road. Kevin, why do markets go through pullbacks? Why do they have to lose a little bit to go higher? Well, some money has to be taken off the table to make it a deal for the next guy who wants to buy in. It's just kind of the way markets work. Now, technically, we are still bullish on our RSI, right? One indicator on our technical analysis says we're still bullish. We're going to be flat, and we're still flat here, so it's uncertain. We don't have an answer. But you'll notice 2 things about the NASDAQ. You get bigger drops at the 50-day simple moving average, where institutional buyers usually will buy more shares and push our market higher. You will not see that kind of support on the NASDAQ. Bigger moves right now. The NASDAQ can't hold an institutional level of support, at least it hasn't through March, because it doesn't seem like there's enough buyers for that 23 to 8% of the FANG stocks. One more time, Facebook, Apple, Alphabet, Amazon, Google, Microsoft. There's just a group of 7 or 8 ultra big cap companies that literally move the S&P and they'll move the NASDAQ. That seems like there are no more buyers. It seems like there are no more buyers. Everyone owns Apple. Everyone that can't afford Amazon already owns Amazon. Everyone already owns Facebook. There's just not the big push right now to support the NASDAQ. Like you can see support on the Dow Jones, on the Wilshire, on the S&P 500. Even the S&P 1000 and 2000 seem to have more support than you have in the NASDAQ right now. So that's just a little tidbit to pay a little bit of attention to. All righty, here we go. I'm going to do it one more time. We did it last week. I'm going to do a poll question one more time. I want to know where you think the S&P 500 will end May. You should have a new window that pops open. You guys get to vote. Vote on if we're going to go higher to 42.50. If we're going to go lower to 41.70, 41.67. If we're going to fall down to the median where we started the month at 40.70. If we're going to go down one standard deviation to 37.99, or if we'll be somewhere in the middle at 38.96. I'm going to give you guys a minute to vote. You've got 30 seconds. Click on the circle on one of those, and we're going to find out where you guys think the S&P 500 may end. Ten seconds. 5, 4, 3, 2, 1. There we go. All righty, I'm going to share the polls. If I was to vote, I would also be voting for the 42.50. You guys are pretty evenly matched, but you know what I noticed? None of you voted for a break of the 50-day at 4,003. All of you said we're not going to finish May lower than where we started. I agree with you. I think you can't fight the Fed. I think you will see a push higher in the market as we're building our base. I think the Fed has our back. No rise in interest rates. Other than gas being up 50% for me here in Utah, I don't see inflation quite as bad as I thought it was going to be. So I think we can all live with those inflation fears. I think we're going higher. Someone asks, is the S&P overbought? The S&P is not overbought. You'll find the S&P considered overbought when you see your RSI chart. Come on, Hurley. Still showing my poll results. That's why I can't do it. Let me hide that. Sorry about that, everyone. Overbought would be right up here at the top. If we saw overbought here, and down here on the Williams %R, which is a medium statistics, it shows institutional buying. We're not quite overbought. Overbought is all this green that you see here. You see it right here for the S&P 500 being slightly overbought. Jim, right now the S&P 500 is not considered overbought. Great question though. All right, earnings this week. We're starting our first week of, well, I'm going to say retail. Usually we go 3 weeks in retail. Eli Lilly reports, Rambus, Mosaic. Boy, I want to say Chegg, but not Chug. Forgot what that one is. I'll remember it. Cheniere Energy, ConocoPhillips, Dominion, Pfizer, Activision, Akamai, Denny's, Herbalife, Hilton, T-Mobile, CVS, Under Armour. We have a bunch that are starting. Wednesday, gold. That is Barrick. You'll see Barrick Gold Corp report their earnings. I'm a little interested to see if there's been enough of a run up in the gold price because of an inflation fear that they can become profitable this quarter. It'll be very interesting to see. I will be paying attention to that one. Hilton, Lumber Liquidators, ADT, CF Company, GoDaddy. MRO is not Marathon, it is Marathon Oil. Vacation is Marriott, New Skin, PayPal, Twillo, Uber. We'll be paying attention to General Motors. Thursday, Budweiser, Cardinal Health, Haynes Company, Kellogg's, Murphy Oil will be a good one. PPL Company is a good one. Dun & Bradstreet, El Polo Loco, I still follow those. GoPro, Roku will be an important one there. Yelp will be an important one, and AMC with all the crowdfunding. Very interesting to see where they end up. DraftKings and Floor for Friday. Earnings, there's not a whole lot of earnings that stand out until you have your ADP number on Wednesday, which should be a blowout number. More people are going to work. Our average weekly report, non-farm payrolls and private payrolls should also be good, which means unemployment's going down. The whisper number for consumer credit is 20 billion. People are getting out. They're starting to spend money on their credit cards. All a good thing. Internationally, I did not notice anything that stood out internationally that we need to pay attention to that truly has a potential to move our markets. Hopefully that helped you guys out for understanding what we did with Under Armour first thing this morning. A couple articles I found online that I've been reading that I thought you would find interesting for information for yourselves. You guys know I haven't been a big fan of Robinhood. Apparently is neither Warren Buffett because they're catering to the gambling instincts of investors. Well, Kevin, how do they do that? They're a lot like Interactive Brokers, where they loan up to 4, 5, 6 times the value of your portfolio you can go into margin on. That is a dangerous, dangerous number to be in margin. And yes, ADP, you heard me really rip on Robinhood about 6, 8 weeks ago. I do think Warren Buffett, yes, he is probably following me. It would not be surprising if him and Munger go on to my Hurley Investment and listen to my commentaries and my trade findings and adjustments on a weekly basis. I'm just saying that because wasn't it a week or two ago? Actually, it was probably about 5 to 6 weeks ago. I called Bitcoin disgusting. I said it's not sound. There are no fundamentals to justify its price. Well, apparently Charlie Munger listened to me as well. They're going to the worst on this one. Just because, yes, it can be used by money launderers, kidnappers, extortionists, black market deals. I get it. But it doesn't mean that it's this bad either. I'm going to go out and tell you it is an easy way to move money back and forth. It's an easy way to possibly get an outrageous gain. I think they're coins that are of lower value that will be better for you than a Bitcoin. But Bitcoin was the first one. And it's the biggest and best right now until it's not. Just take it with a grain of salt, some good information for you to read about Bitcoin. Biden to unveil a new $1 trillion plan for children and families. Here's what's in it. One more time, I'm trying to go up with the most updated announcement on what could be in the second stimulus package. Understand, if they want to pass it, they can pass it. There's nothing that the Democrats can really do. Excuse me, nothing that the Republicans can really do. The Democrats have the number that they want to pass it, they will pass it. Is it fiscally responsible to do $6 trillion of stimulus, which is more trillion than all the stimulus by all the presidents previously had in the United States? I'm going to say probably not. But will it be important to some people? Yes. It really depends how much of the bill is not fluff, how much is not pork, how much comes back to the U.S., how much is for the U.S. people. It'll be very interesting to see if we can truly create growth from American in by, for all intents and purposes, sponsoring the growth of the United States for the next 3 to 4 years by stimulating the crap out of the economy. A $6 trillion stimulus after the $900 trillion we had at the end of last year, it's too much. It's trying to just kick the can down the road. You've got to pay for it sometime. With our economy improving, this is one that can probably be held off on to see if the growth in the economy might work better than giving out free money. Probably more important to stimulate the growth in business so that we can see some growth in U.S. Real GDP, right? 2 quick questions came in about Bitcoin. Marco, good. Is your concern about Bitcoin because of what it is, cryptocurrency, or is that Bitcoin as a company? Great question. So cryptocurrency is coming whether we like it or not. I use cryptocurrency through Apple Pay. I use it through Facebook. I've used it in PayPal back in the days. Cryptocurrency will be an easier and down the road a more fundamentally sound way to distribute money back and forth. Bitcoin as a company should not have hundreds of billions of market cap. There's no value, there's no income, there's no real earnings. It is, you can't have a forward PE in the thousands. Bitcoin as a company and as a coin is overvalued on a fundamental basis. Second question, Kevin, have you ever bought a Bitcoin or a coin swap? I have dabbled a little bit, but as I made the comments about 6 weeks ago, I was doing research into the cryptocurrencies, and Coinbase is where I'm probably going to move towards. As I was doing my research to present to you my findings, my study, my understanding, I got COVID the start of April, and it just knocked me off my feet for 2 weeks, and I'm still just doing a bit of recovering. So my hope is by the middle of the way, probably the beginning of the 3rd week in May, I will share with you my cryptocurrency studying and where I'm going to start to recommend, if you'd like to dabble, where I would see the best dabbling available. It most likely will be coin-based because you can protect it with options, and it's at a dollar figure that's more acceptable to middle America. A $60,000 one coin purchase that's not protectable with such big swings where a standard deviation is nothing is not where we're looking to go. So I'm doing my research. I'm trying to find out where we can go. And as I do my research, it'll be interesting to share that with you. Come here, probably the beginning of the 3rd week in May, 2 weeks from today. Great questions from both of you. Okay, let's keep going down. I found it interesting, since we do trade GE, interesting understanding of what they're doing. Please do a little bit of research to better understand where GE might go in the near future. One more thing, you wonder why Tesla moves so much and why it can fall so quickly. When you're throwing $100 million of profits, not from the sale of your cars like it should be, because of other investments on the side. I know you're going to tell me, well, Apple invests billions elsewhere and so do their technologies. I get it. Tesla's a car company. Tesla made $101 million out of their $431 million on trading Bitcoin. That means roughly 24.4% of their profit was not from the sale of their cars. It was from getting lucky on an upswing on Bitcoin, which means if it falls down the other way, you could have $438 million of gains from the car sales of Tesla. From the car sales on Tesla, and then see a $500 million loss on their Bitcoin investment. Once again, I think he's exciting to listen to. I think he's pretty interesting and innovative, but you should not be taking your company through a Bitcoin investment. You should not make or force your board to accept your thought process. Let's face it, Elon Musk is not running Tesla wisely. If you're looking at investing in Tesla, if you're Christina and running a hedge fund, your profit and growth from your company should be on the profit and growth from the product that you make and sell, the service that you offer. The fact that it wasn't, and a third of their profit, well, 25% of their 24.4% of the profit was from a bet on Bitcoin. Risky, risky, risky. Watch out where you're going. Again, I am a Warren Buffett follower. Pretty interesting to pay attention to his buybacks. He is also really cash heavy right now. When you see Buffett get cash heavy, it's an outside indicator that a recession is usually coming rather quickly. It's a social science. Just because Buffett gets cash heavy doesn't mean a recession is always on the horizon. But about 75% of the time, we're going to see a recession in the next 6 months. Last but not least, why investors should ignore the old Wall Street sell and may go away. Stimulus. Too much is on the books to push our markets higher. A really interesting article on why you might want to stay in the market instead of selling away and going in May. We always know September is the third worst month. October is the worst month in the stock market. We usually always have you guys protected during that time so we can sell high, buy low, and pick up or add more shares to your account without asking you to put more money in. That's one of the benefits of what we do at Hurley Investments. What other questions do you guys have? What questions do you guys have that we can answer for you? And Bill, I'm going to kind of turn yours into a question if you don't mind. Interesting to see what chip shortage will do to Tesla. Definitely. Tesla is, in my opinion, one of the more advanced or technically advanced cars that's out there. With the chip shortage, it'll definitely slow down the sales and the production of Tesla cars. Mary, great question. Kevin, would you recommend cryptocurrency at this point in time? My answer is no. But my answer is no because I personally have not done enough research to put me of a level of comfort, nor do I see the cryptocurrencies being able to protect them like we do our stock ownership through that long put option. That long put acts like insurance on your stock, just like we went through Under Armour here. We have the right to we have the right to sell a stock at a certain price for a certain period of time. If Under Armour blows their earnings and goes down to $16 a share, we still have an insurance contract that allows us to sell our stock at $24.50. We will literally make $8.50 of the $8.50 on the way down in exchange for the premium to buy that insurance contract at $1.43. We're going to pick up almost 50%, if not 50% more shares of stock. Right now, we are unable to do that with most cryptocurrency. So because it's not optionable, or because the track record and volatility make the purchase of protection or insurance way overpriced, I would not currently be in a cryptocurrency at all. And I 100% blame that. Not that they're bad, not that you shouldn't be in it or you're trying to catch a wave of the future. I'm not in it because I don't have enough research and information to make an educated decision at this time. I also don't have the information or have found one that I feel is semi-fundamentally sound with the ability to protect it using the options like we do on your stock ownership. So, Mary, that's why I have not been in it. I have dabbled a little bit. I have not made anything to speak of. That's why I would not currently recommend someone else to be in it until you know more than me and can justify your purchase. Great question. Thank you very much. Are there any other questions for tonight? If not, again, Marco, pleasure to have you for the first time. Thank you for attending. Doug, man, it's been almost a year. Great to see you back. We appreciate your service that you've done. Thank you for supporting us through our military. And thank you very much for all the service you've done throughout your career. All right, guys, I see no other questions coming in. I will work on getting this posted at myhurleyinvestment.com. For the record, tomorrow night, because of my schedule, I got to meet with my tax guy. I will not have a trade findings and adjustments, but I will try to do that re-record on the Armstrong article and have that up by 6 o'clock tomorrow night on the myhurleyinvestment.com website, so you guys can listen to a recording of the trade findings and adjustments for tomorrow night. Again, I'm canceling tomorrow night's trade finding adjustments. My tax guy is gonna he's probably gonna rip me a good one, right? As he looks through things and questions to make sure I'm doing everything okay. Good night, everyone. Thank you for being with me tonight. I'll look forward to seeing you next Monday night on the Hurley Investments commentary. And guys, be safe out there. Be safe out there. Still protect yourself from COVID and always protect your investments. Have a good evening. I'll talk to you next week. Bye-bye.